Well, greetings to all my investment clients. My name is Walter Measers, your wealth manager, CPA tax advisor. I am recording this on Sunday evening, 11:10 p.m. Just wanted to give you a quick update on the weekly stock market recap. But as always, I need to go through this disclosure. Forgive me, I need to start my slideshow. But as I mentioned, please read this full disclosure. This is not investment advice. It's not intended as investment advice or a solicitation to buy or sell any securities. Please, anyone else watching this video other than my clients, please seek investment advice from your current advisor, or if you want to do a risk analysis of your portfolio. If you are not a client, just give me a call directly on my cell, 586-873-8156. And again, I would stop this video at your leisure and just read the full disclosure. Okay, so let's get into kind of a recap as of March 29th. Markets are under pressure. Iran war raising yields and sticky inflation, so just tons and tons of uncertainty. Major geopolitical issues, again, U.S.-Israel strike on Iran began on February 28th and still is continuing. Not sure when it's going to be finalized or ended. Nobody really knows for sure, and that's making markets really nervous. Markets hate uncertainty. I won't go into the detail here. If you want to stop the video and read at your leisure, because I really want to make this a quick recap. Stock market trends week ending March 27th, 2026. So the S&P 500 for the week is down 1.67, Dow Jones 1.73, NASDAQ down the most, and the VIX, really this is VIX, that's a gauge reading of volatility and really concern and fear of the market. So everything's pointing right now in the wrong direction. Year-to-date performance, January 1st through March 27th. Again, S&P is down 5%, Dow Jones down 3.7%, NASDAQ down 7.8%, and Russell, the really 2,000 stocks down 1.9%. Gold is the highlight, but still gold has also pulled back. 10-year yield bonds actually are going in the wrong direction. They're ticking up because of inflation, short-term fears of inflation. We are sitting, as I mentioned, in cash and short-term ETFs, BIL, T-bills, 1 to 3 months, really no exposure to the market. As I mentioned last time, we are standing on shore on the sidelines, just observing the storm, meaning the stock market. We have no clue which direction it's going to go, but the probability of a major pullback is getting higher and higher. So the VIX, the fear index, grows 65%. So those are not good signs for the next week, 2 or month. It could turn if the war ends. There's going to be pop in the market. But at this point, we are on the sidelines. So kind of trend line from all-time highs. What happened to the broad markets? S&P 500 is down 9%. The all-time high was January 28, 2026. Since then, it's pulled back 9%. Dow Jones, same thing. NASDAQ is in correction territory, meaning if there's a pullback from the high, more than 10%, we are in correction. Russell is holding out the best, and actually gold, but gold also has been trending down. So you can see everything is trending down. We don't know if this is going to continue, whether we could see a correction of 10, 20, 30, 40, 50%. Nobody knows for sure. So I'm not here to scare people, just looking at reality and what the markets may do short term or even long term. Long duration bonds and interest rates, again, they're heading up, going in the wrong direction. As I mentioned last time, we're probably going to be at some point getting into long duration bonds, 20, 30-year bonds. But unfortunately, right now, interest rates are heading in the wrong direction. At some point, they're going to start to head down. That it will create great opportunity for making a very good rate of return where the markets could be correcting. So inflation update, CPI headline is as of February 2.4%. PCE, that's the one that the Fed really looks at, is 2.9. Import prices have risen 1.3, and Brent oil prices near 2022 high. It peaked 112, and it keeps fluctuating. I think right now it's under $100 a barrel. But anytime oil moves up, the market really reacts in a negative, downward trend. Risk to watch, again, Iran war. That's really the key driver right now, that markets either are going up on good news that potentially the war may be ending. The market likes that, it starts to pop. But beware of trading on news. News is short-lived. The fundamentals of the economy and the market are starting to deteriorate. I won't go into opportunities because really the two that we are going to be looking at is long duration bonds and eventually gold and maybe some other opportunities. But the two categories that really were at some point we'll get into is, again, long duration bonds and probably back to gold. So thank you for listening and watching. If you have any questions or concerns, just give me a call directly on my cell, 586-873-8156. But I want to just leave you with this. I just want to underline that all my clients are out of the market. We're sitting on the sidelines. We're on shore watching the storm from afar. And if the storm clears, meaning the market definitely reverses trend to an upward trend or some other asset class, then we will be getting back out to sea with our boat, or actually back to the stock market. So again, thank you for watching. Hope you have a great week, and we will talk to you or see you next video. Next weekend will be Easter Sunday, so I may push it back to Monday. But anyway, wishing everybody happy Easter. Next recording will probably be after Easter. So again, wishing everyone happy Easter and many memories of family get-togethers. We, in our Polish tradition, we always have traditional Polish breakfast, call it brunch. Looking forward to that, seeing family, friends. So thank you again for watching, and we will see you next week. Take care. Bye now.